Welcome to a milk market tidbit for the June classic component values that USDA actually released last Wednesday. But with the 4th of July, I'm a little slow on getting this out, and I'm recording this on Sunday, July the 7th. All right, so the base class 1 price, we always know quite a bit ahead of time, and that came up $1.62. So the guys in the Southeast are going to be very happy. It's at 20.08, and that's one of our highest that we've had in the last year. Class 3 prices were 1987, and that came up another $1.32, from these lows that we had back here in the spring of the year. And that would be our high for the year. We had a low last July at 1377. Let's talk about that class 3 contract for just a minute. So it traded quite a while in this 1850, through 2023, came down and got caught up in the bird flu scenario, ran up, ran down, and then finally finished about 1987. So if we look back 6 months, we're up about $1.75. For a long time, with the graph on the right, we would fall 6 months out. And in fact, in that red box is what I would call a bear market, where whenever we had a value and we look 6 months out, it's probably going to be lower. So we've had 2 months now in a bull market to where the prices have come up. However, the other thing that I'm tracking these days is what's called an emotion index. And the question is basically how much noise is in this last little bit of trading of the contract? Because we know over the last 28 days, it pretty well is in glide path. So really it's, about a month and a half to 2 months out. Whenever we have a lot of emotion, this number gets pretty high, up around 35, which is what it was July a year ago. And we've been pretty high here for the last 2 months, but it is coming down. So things are beginning to stabilize just a little bit. We always remind ourselves that the classic component numbers come out of the National Dairy Product Sales Reports. There were 4 of them for this month, and just a couple of things I want to highlight. Number one, block volume should be around 12 million pounds, and it's been below that, for at least the last 3 weeks. And barrel volume should be, 13 and change. It finally came up this last week. But there was a little bit of a surprise in this contract because the trade thought it would be like 1990, 1991, 1992. But there's a little disclaimer on the back of the National Dairy Sales Report that says they've got the right to go back and change data, any time they want in the last 5 weeks. And so they actually changed not only the price, but the sales volume on the 8th of June and again for the 22nd. So this brought the contract down about 3 or 4 cents from where everybody thought it would be. Our fat prices were up about 8 cents with strong butter prices, $3.54. That's still not the high that we had last October, 371, way off of the low that we had back last July. And this looks like it's going to trend up a little bit. I wouldn't be surprised if it was fairly flat. And these are the settlement prices as of Friday. Protein prices came up 32 cents to 205. That's not quite the high, but it's pretty close. But it's way off of these lows that we had back, just 2 months ago. So getting protein out of the sub $1 is much better. And so we're still looking for around $3 as an ideal price for protein, but it's at least pushing 2. And it's going to kind of bop around here for a while, right around, $1.95 to 2.05. Other solids prices came up about a penny on whey, so we're at 23 cents off of the high that we had at 29 cents just 2 months ago, but way off of this low. I mean, we're back here at under 10 cents, single digits. This looks like it's going to be coming up a little bit, but whey's under a lot of pressure, so I'll have to put a big question mark as to whether that is going to come up like that. Class 4 prices just kind of keep marching up a little bit. They came up another 58 cents to 21.08. And they look like they're going to kind of continue up a little bit, and that's going to be on butter more than non-fat dry milk because non-fat dry milk's under a bit of pressure on the global dairy trade. If we just plot out the futures contracts, class 4 is going to be above class 3, all the way through middle of 2025. Interesting, just 3 weeks ago, there was a point where Class 3 was trading above Class 4, but that has totally evaporated. The other thing this means is any order that has the ability to depool is probably going to be depooling Class 4 pretty heavily, especially in the first part of the year. With these prices, we get to look out and see how is our price this year comparing to next year. And of course, we've got 6 of these in the bag at this point with June. And right now, we've got about $1.50 in 2024 over 2023. And that's what we've been saying almost since the first of the year is about $1.50. I think we were like $1.75 plus or minus 25 cents or something like that, but it's right in that $1.50 range right now. So this next week, the only real data we're going to get are the National Dairy Sales Report for July and the statistical uniform prices, but even those probably won't be out until the 15th, given that that's a Friday. We're going to get into what I call a blackout zone because there's absolutely nothing of significance for the next 2 weeks. And it's not until the 23rd that we get the milk production report and the 25th that we get the cold storage report. Those are the two that actually give you an idea of what's going on in the market. So expect a lot of variability here for the next 2 weeks. All right, I'll get you another report when we get the federal milk marketing data all summarized. Like I said, that will probably be closer to the 15th.